like imagine the history books 1,000 years from now. It's going to be like this really short blip where we talk about how we industrialized the world, we developed new technologies, and we did it on the back of fossil fuels, this stored energy that was built up over many hundreds of millions of years. We exhausted about half of it in a 100-year period, but then ultimately transitioned off. It's a finite supply. Like the planet will not be running on fossil fuels. It's like not a statement of opinion. This is a statement of fact.
Hello and welcome back to the Plugged In Podcast, a weekly news show about the future of transportation. I'm Editor-in-Chief Patrick George.
And I'm Tim Levin, Senior Reporter at InsideEVs.
We're here today with a very special guest, a man who I think almost needs no introduction, but I'm going to go ahead and give him one anyway. Joining us on the Plugged In Podcast is Rivian CEO and founder RJ Scaringe.
Thanks for having me.
RJ, thanks for joining us out here in the hotbed of the EV transformation America, Jamaica, Queens.
Yep.
Yeah. We're in a new space because you've been traveling. You were out. I want you to tell us a little bit about what you were doing in New York State, and we caught you right before you left. So thanks for being with us today.
Yeah, we just launched our charging outpost in the Hamptons, and it's beautiful. It's right as you're driving out to like Southampton, the only way to get to the beaches, you have to drive through this road, and we have a charging space that's right there. It's a really nice setup. It's got a bunch of high speed, up to 400 kilowatt chargers. So
yeah, for all kinds of EVs, not just Rivians.
Yeah. I was there. There was a Cybertruck, there was a Kia, and a bunch of Rivians. It was great.
How's that feel to see out there?
Oh, it's great. It's as we continue to grow our network, and as we've opened the network up, it's really awesome to see different brands, different company, different car manufacturers having their vehicles on our network.
For sure. There was a New York Post story about you guys recently. It said like the Rivian R1S is the new car to have in the Hamptons. Did you see that?
There's a lot of them out there. Yeah. It's definitely sort of seems like every fifth car is a Rivian. Yeah.
It's gotta be a good feeling.
Yeah.
That's it.
Yeah, so I thought maybe before we want to talk about the future of Rivian, we want to talk about what you guys are working on right now. But let's start with maybe take us back to 2009. You start what eventually becomes Rivian. What was the EV world like back then, and what made you want to start an EV company?
2009. It's a long time ago. It's hard to believe, but 2009 at that point, the Model S hadn't launched. The Tesla launched the Roadster, and they had done a great job with the Roadster showing people electric cars can be exciting and fun and super desirable, but of course, in that case, in a two-seat sports car form factor. But we hadn't begun to see electrification make its way into anything even remotely mainstream. And ultimately, what we would launch with a truck and an SUV seemed, that idea or even the concept of that seemed nearly impossible both from a technical point of view, and certainly from a market adoption point of view. But preceding that, I'd been planning to start this company since I was a kid. So I grew up a huge car enthusiast. I grew up wanting to work in transportation and on cars, not really knowing what that meant, not really knowing even what the technology was going to be or the type of vehicles. And when I started, the product concept we had and the overall strategy that we had were quite a bit different than what we have today. So we had to go through a bunch of pretty meaningful pivots and shifts around the product strategy, the technology strategy, even the go-to-market and brand positioning of how we were thinking about the business, but ultimately arrived at a target state of what largely you see today.
It's a hybrid sports car at one point, wasn't it?
Yeah, it was all over the place. So we went from everything from pedal assist vehicles to hybrid sports car to really small electric pickup, to ultimately realizing that to build the kind of brand we wanted to create, we wanted to start with a flagship product, which ultimately became R1. And do that, we wanted to make the products incredible, so incredibly good in a number of areas that you typically wouldn't find in a pickup. So something that was really quick, so incredible acceleration, capable off-road, capable on-road, lots of unique storage. But that process was not an overnight process. We had to go through a lot of iteration on what the product concept was before we got there.
You're in the middle of flash forward to now, in the middle of kind of what you might say is a challenging year in the EV space in general. But one with a lot of products on the road right now that are really promising, and some even more promising ones down the line. So, just in general, how are things going at Rivian these days for you?
Yeah, well, I mean, you said it right as we opened. The R1 product's purpose was really to establish and build the brand. It was to introduce to the world who we are, do it in a vehicle that over delivers on performance and capability, but also have a whole like element of like the brand emotion or how the brand feels that comes across, and then use that on a whole series of lower price, much higher volume products. And so in that regard, it's been harder in many ways than we expected, but it's been more successful than I could have hoped. So if you'd asked me in 2018 to predict 2025, and you said you'd have the market share leading product in the premium space, so over $70,000, we have the best selling electric SUV in the country. In fact, this is interesting. We have the best selling premium SUV, electric or non-electric, in the state of California and the state of Washington.
That's right, yeah.
Have, for the last 2 years in a row, essentially since we launched, have the highest rating in terms of customer satisfaction on Consumer Reports by a significant degree, and the highest rate of repurchase by a very, very significant degree. I'd say, well, that's great. And, so this was 2018, 2019. I'd say that would be the ideal. Now, I think in the end state needing to be fully electric, and it will be fully electric. And so we look at it through the lens of Rivian need to create lots of compelling products at more affordable price points that open up the brand aperture to a much larger group of customers. We do that with R2. And then we hope that our products help inspire growth and competition so that there's lots of choice for consumers. And I think that's been really in some ways a core theme that's happened in the United States in a huge market, is that there's been so little choice of highly compelling products that we've seen adoption really sort of stop growing at around 8% new vehicle sales. And we've seen sort of a reflection of that lack of choice in the fact that there's a single huge market share dominant player with, of course, Tesla with the Model Y.
Yeah.
And so
still
to this day, around 50% market share in the United States. And so we really need choice. It's not to say that the Model Y isn't a great vehicle. I've owned one. It's a great vehicle years ago, but we need to have Model Y as a choice. We need to have our R2 as a choice. Ideally, there's 3 or 4, or 5 or 6 or 10 other great choices in order to draw in the other 92% of buyers who aren't buying electric today.
And so when you said that, the road to today has gone in some ways a lot better than you could have ever hoped, and also has been harder in a lot of ways, what were those hard parts? What's been hard about getting to where you're at?
Running an EV startup is pretty easy overall, right? Anybody could do it.
Yeah. I mean, there's a lot of things of starting a new, this is true for a car company. I think this is true for any brand, which is if you're building a new brand and the brand is consumer facing and it's intending to build trust and emotional connection with customers, you actually need like a degree of magic. When you think about it, like how does Nike become such a powerful brand? How does Apple become a brand that you care about? That people actually get tattoos of these brands on their bodies. And the magic is the product, the authenticity, the capabilities, the tonality of the brand. And so we had all this work we did that was really like esoteric, like deeply looking at like what does Rivian stand for? What is not tables, like would you do this? Would you not do this? What are the things you would put on the vehicle? Would you not put on the vehicle? Would it show up in a showroom? What wouldn't show up in a showroom? All those kinds of really deep thoughts, and to see that manifest in a way that is so consistent with what we'd hoped for, and in some ways exceeds what we'd hoped for, is just humbling. It's sort of wild. It's hard to believe. And But then in contrast, some of the things that seem to be much more deterministic, that would have been like, let's execute them, turned out to be a lot harder. And really starting with COVID, I mean, we didn't anticipate, if you asked me in 2018, as we're thinking about launching, and we originally were going to launch in 2020, we ultimately launched R1 in 2021. If you said, we're going to be building a plant, it's a multi-billion-dollar activity, right near the start of the installation of equipment, so you have over $1 billion of equipment that's going to be showing up in the early part of 2020. So February of 2020 is when the equipment was scheduled to start showing up. If you'd said to me a global pandemic would start in that same month, that would require the entirety of the workforce to work remote, which is fine if for a lot of jobs, but certainly not
for building cars,
or for building a plant to build cars. And so that was the first big giant hurdle, and there was no protocols in this. So it's now been a few years, but you remember back in early 2020, people were scared for their life, for their health, in a way that we aren't today. And so we had like different colored vests inside the plant, and the green vest team couldn't interact with the purple vest team, which couldn't interact with the orange vest because we didn't want to spread anything. And it was hard. So that ultimately delayed production. And then we had a massive global supply chain crisis, which maybe perhaps was most pronounced with electronics and semiconductors. And again, I would have, in 2018, 2019, I wouldn't have predicted the commodity components, everything from capacitors to small SoCs, small systems on chip, like
being unable to secure those things.
Just unable to secure them, but even more so, like we had almost an infinite willingness to pay because we just wanted to be able to produce and ramp cars, our production. But because we were a new manufacturer, we were like last in line.
Back of the line. Yeah.
We were back of the line. It was very, very hard to get production supply. And so just the whole 2022 and a big part of 2023 were just horrifically hard of trying to build the vehicles. And I think the thing we always think about, and certainly even as I talk about it, it sort of points to the constraint on production, and therefore the lack of vehicles being produced as being the biggest challenge. But in some ways, the bigger challenge was that we had binding offtake agreements on components, most of which actually still came. So we had 95% of the bill of materials that was showing up, and we didn't have a place to put all the parts because we weren't consuming all those parts because we were constrained on a very small number of parts.
Right.
So we had, a lot of warehouses that we had to fill up with parts. And we're talking, this isn't like thousands of dollars of parts. We're talking billions of dollars of inventory we built up because we couldn't build the vehicles. And so that then happened. And then things started to stabilize. We got production to a place. In fact, Q4 of 2024, Q1 of 2025, we demonstrated positive gross margin, which was awesome for the business. And then we're getting ready to launch R2. And our next big, like massive digital change or step change to an operating environment came, which is this whole massive rethink of how we trade with other countries. And so that inserted a tremendous amount of cost and complexity into the supply chain very, very quickly in Q2 for us. Uniquely for us as a company, we produce 100% of our vehicles in the United States.
Yeah.
All of those vehicles are, of course, electric. So things like export controls on rare earth metals are really hard. There's not, there is no supply chain at scale for magnets outside of leveraging heavy rare earth metals from China.
From China specifically. Yeah, it doesn't exist.
It just doesn't exist. It's like it's not a, you can pay more and get it. It just does not exist. So,
and I would just very quickly, what do you say to those people who would just say, well, just build it in America, just do it in America?
In the fullness of time, that could be true, but it's like the lead times in that are time measured in years.
Right.
So I think with so much uncertainty between the trade relationship with China and the United States, you are going to start to see some of that supply chain emerge. But it will take a lot of time. It'll take a lot of investment. And in the interim, we need to continue to trade and do business with China. So I think that whole shift has been perhaps the most recent surprise. Now, granted, we've built a lot of skill set and capabilities, so and this has happened well before the launch of R2. So we're very planful in it. We can respond to it. We've come up with lots of creative ways to manage export controls. We've started to adapt and evolve the business around the new tariff structures. And then I think just the whole change in the EV policy. So we have a significant amount of revenue, us and Tesla, around selling our excess credits to legacy manufacturers.
And I want to ask about that. Which do you see as the biggest challenge for your business as this kind of environment changes for EVs?
Yeah.
Is it more the tariff side, or is it the end of EV tax credits, end of regulatory credits? Like, which is the one that keeps you up at night more?
Well, they're also different.
Yeah.
The tariffs in time we can address those. So we can. Well, let me just talk about the big challenge with tariffs is there are components. Putting aside some of the unique situations where materials are uniquely processed or made in specific countries, let's say China, putting those aside,
like the magnets that you need for the motors.
Yeah, like heavier earth metals. That's a unique constraint that if there's an export control on those, there's simply no way around it. There will be a stop in production of anything that needs those globally,
right?
Because there's no place to get them. That aside, a lot of the supply chains that relied on, let's say, Mexico or other lower cost labor countries were parts or systems that have high labor content and had over the last several decades have shifted production to these lower cost countries where the labor cost is lower and where there's labor availability and desire to work in these areas. And so as we see policy shift back towards having those items produced in the United States, there's a double challenge. One is the cost structure for manual labor in the United States, for production labor in the United States is much, much higher. But two is the availability of people that want to do that type of work is much, much lower. And so I think we're going to see some of that play out. There's some big questions that everyone is thinking about to say, does everything move back to the United States? Because of the policy changes back, it's a highly cost disadvantaged place to make a lot of things. And so there are big investment decisions.
Or is this a system that just gets renegotiated again, hypothetically, in another 4 years? Like, do you do it or wait it out?
That's the question. So I think over time that starts to solve itself. I mean, our approach is we produce a tremendous amount of content in-house. We're highly vertically integrated. We are very U.S.-centric in terms of our supply base. So we're actually pretty well protected there and pretty well positioned there. Your question on what hits us harder, the trade or some of the EV policy. I think on the EV policy side, it's twofold. In the short term, it of course hits us. So we have, hundreds of millions of dollars of revenue that we were generating selling credits to legacy manufacturers that don't produce either efficient enough vehicles or enough EVs that have dramatically been reduced relative to what they were. And of course, the cash, we feel that in the short term. But you have to recognize what that does to the market dynamics. So if you look at, you guys follow this really closely, if you look at what's happened in the market, you have a number of EVs that are very, very incentivized to sell, like way beyond what would be financially responsible for these businesses to offer. But they've been subsidizing the sale of those vehicles as a way to generate their own credits. So the vehicles weren't generating enough natural demand. So to generate more demand, this is why you see like a $50 lease price on a car that should be maybe a $400 lease. It's just
$20K worth of incentives on a Honda or something.
$25,000 worth of incentives on a car that costs $35,000, $40,000. It's like the cars are. I mean, I think you even had a story once. There's like there's a Nissan Leaf, I think, for like $19 a month or something.
Something like that.
So you see these like wild deals. That is just like purchasing of incentives through vehicle sales. It's one way to look at it. So that's going to go away.
Yeah, we always kind of knew that would be the case. That these insane deals would never last. Yeah, forever.
It's not a sustainable long-term structure. But the other thing that's going to happen is you're going to see, we're already witnessing this, a significant reduction in electric vehicle programs and a reprioritization. Unfortunately, I say this is like very bad for my kids and their kids, very bad for the U.S. auto industry, but a reprioritization of capital towards internal combustion.
Yeah.
So things that I never thought would happen a year ago are happening now, which is just like new engine programs getting announced, new engine plants getting built. It's sort of like
After years of them saying, you know, this generation of engines is our last, and that's it.
like,
Now it's like, oh, well, about
blows
that.
my mind. It blows my mind this is happening, but nonetheless, it is. And so what I think will happen is we play out the rest of the 2020s, like through 2029, 2030, is you're going to have a sort of a vacuum of competition, and the pure play EV focused companies, Rivian, Tesla, there's not very many, because they're completely and fully focused on electrification, will have the advantage of a pretty thin competitive playing field. And it's important to note that that's on the back of an environment that's already been really thin in terms of competition. Meaning, if you want to buy an electric vehicle for under $50,000 today, I would say in the United States, there's clearly, not to be specific, there's well under 5 great choices.
I'd agree with that. Yeah.
Great choices. I'm not saying like there's
Model
many choices.
Y, Model 3, and like a handful of others. Yeah.
That's it.
Yeah.
And so I think that unfortunately is going to sustain. I think you're going to continue to see a very, very small number of great choices. And so the way I think about it is the change in the regulatory frameworks that were intended to incentivize sort of with a stick manufacturers to electrify. As that goes away, I think long-term, good for Rivian, good for Tesla. Long-term, bad for my kids, bad for the U.S. auto industry, bad for U.S. competitiveness.
Just to elaborate, bad for your kids and their kids. Why do you think?
I started the company because I think we have a real carbon challenge. I think we need.
There you go. Yeah.
I think we have a massive challenge from a global point of view. We're rapidly recarbonizing the atmosphere.
Yeah.
It's very, very hard to reverse.
In terms of climate, carbon emissions, I mean, yeah.
Yeah, and so the faster that we can shift as a society towards electrification, the less risk we're putting on our climate systems. You were just commenting on weather patterns in New York. I mean, we're seeing the beginnings of a dramatic shift in how we think about the global temperatures and, importantly, storms and weather patterns throughout the world. And
a time when kind of the United States has absconded any sort of leadership in that space, if we ever had any, you know.
But I started Rivian for this reason. I think that a big part of driving this transition is going to be businesses that are formed that create super compelling products and help drive customers to them. So like the way I think about R2 is the fact that it's electric is secondary to how awesome the vehicle needs to be, and it needs to equally attract, people who are driving ICE vehicles and haven't even thought about an EV, and then say, wow, it accelerates like this, it can do this off-road, it can fit all my gear, this is the price, it looks really cool, it's fun to drive. And we've seen that with R2, we've seen that with R1, where we have vast majority of our customers have never owned an EV before. I say this all the time. It's also really important that we have a really equal split of Republicans and Democrats buying our vehicles.
Sure, yeah.
Michael Jordan had the great quote of Republicans and Democrats both buy Nikes, and I think like the politicization of EVs is terrible. Like I try so hard to say this is not political. This is and do everything we can to not make it or let it be political.
Yeah, one thing we wanted to ask you: how did it get to that point? Do you think? Like, how did this? I remember I was in China earlier this year, and I explained to some folks at some of the Chinese OEMs about this partisan divide on EVs. They looked at me like I was insane. It was just why
very
does it
unique
like
to the United States. Yeah, it's there are a number of things that are unique to the United States, like even how the U.S. is on an island of one. It's singular in terms of large developed countries that seem to have politicized carbon emissions. That sounds like a political science dissertation. What we try to do is to try to avoid piling onto that sort of the nature of how this has become so politicized, and take a big step back. And so I actually talk as much as I can when I think about climate or sustainability around our kids. And it's such a unifying way to remove the element of policy. And I think some of it is like the feeling that the government shouldn't tell us what to do, but rather, look, if I look at the most far right friends that I have and the most far left friends that I have, there's lots of differences in terms of, your views on policy, but there's really beautiful similarities around they both want the best thing for their kids.
Yeah.
And they have different views on how to achieve the best outcome for their kids. but we're all saying what's best for our kids. And if you say to each of them, you want your kids to live in a world where the ocean is lifeless and where there's no birds in the sky and where you can't go outside in the summer because it's too hot, and in the spring or in the fall the storms were so bad that every weekend spent picking up debris off your front yard. Like, I'm exaggerating for effect here, but nobody wants that. People want to have a world where you have beautiful biodiversity. The climate patterns are largely what we've experienced and lived with for the last few hundred years, and they want to protect that for their kids. And so you're like, oh, okay, so now let's talk about how we can do that. And it's like while it gets politicized, there's zero debate that it has to be electric. There's no world in which we're going to continue running the planet on fossil fuels, and that has to happen. I think the fossil fuel thing is really interesting. I talk about this a lot. We are living in, like, imagine the history books 1,000 years from now. It's going to be like this really short blip where we talk about how we industrialized the world, we developed new technologies, and we did it on the back of fossil fuels, this stored energy that was built up over many hundreds of millions of years. We exhausted about half of it in a 100-year period, but then ultimately transitioned off. It's a finite supply. Like, the planet will not be running on fossil fuels. It's like not a statement of opinion. This is a statement of fact. In a few hundred years, it just simply can't be, unless our standard of living dramatically degrades and the rate of progress dramatically, slows down. But for us to continue living the way we do, in rooms that are conditioned and with lighting and with the ability to fly around the world, and tropical fruit in the winter and places that doesn't grow, like all those like things that are very much artifacts of modern society, that requires us to shift to energy systems that can sustain beyond pumping oil out of the ground and digging coal out of the earth. So it will happen. And I think the countries that lead that transition are going to be the countries that are economic leaders globally for the next few hundred years, maybe longer. And if we do that well as a society, that's going to ensure that the planet is protected as well.
And like, so we talked a second ago about how policy is going to, this is going to slow down the rate of growth.
Yeah.
It's pushing a lot of these automakers to pull back their electric programs, to invest more in combustion. But we also seen that trend already happening over the last couple of years, right? As a lot of these automakers, a lot of analysts we hear from have said, like, this market in the US just hasn't developed as quickly as they had expected. Have you found that to be the case as well? Like, has the market not developed as quickly as Rivian expected? And, why do you think the industry kind of missed the mark there, got that a little bit wrong?
The causality of a lot of this is really hard to place, but I think I'll answer your question on Rivian, and then I'll postulate on how others may think about this. But as far as Rivian looks at this, today we sell the R1. We sell it primarily just in the United States. We do sell in Canada, but it's the vast majority of our volume is in the United States. And in the United States, as I described, our R1 represents the market share leading product for products over $70,000. And so, it's how you draw the boundary diagram always matters in these things, but presuming you draw it in a way that categorizes the vehicles across like premium SUV, we're about 35% market share on R1. And so we wish the size of that market was bigger, but the number of people that are buying $90,000 vehicles is still relatively small. And so our hope is that if we can translate even a fraction of that market share, not market share of just EVs, but market share relative to EVs and ICE, into the segment that R2 is going to be playing in, it will help dramatically expand the market in much the same way that Model Y drives half the EV volume.
Right.
Yeah.
Model Y, Model 3 drive half the EV volume in the United States. I think the thing that has happened that makes the causality hard for other manufacturers is the products haven't sold nearly as well as they thought they would. Not in every case, but in almost all cases. And again, not in every case, but in a large number of cases, I would say the product's not that good. It's not that desirable. And
very first draft for a lot of them,
first draft, or even I think first draft is sort of acceptable and explainable. I think the ones that have been really challenging is the second draft. When people have launched, they've gone back and they've gone and done a new product and say, okay, this is our new attempt at electrification, and it just has not connected. And
any examples stand out in your mind?
of course, I'm not going to call out anybody specifically.
I had to try.
Yeah, but you can see them, and so then you could either say this is because the market doesn't want to electrify, and I think the existence proof against that is Model Y. So it's it's one of the best selling, and at least in the segment, it's by far the best selling vehicle, and one of the best selling vehicles globally. So you could say it's the people don't want to buy electric, but I don't think that's the case. I think the reality is they don't want to buy marginal, like okay-ish electric cars that are good enough and sort of okay or good at everything, bad at nothing. But you need products that are not like it's okay. You want to be like, oh, that's awesome. And I think until we start to have 10 products plus products that are exceptional, that are like, wow, I love that thing, and it fits my form factor needs, my brand desires, my performance criteria, what I'm looking for in terms of pricing. Until you start to have a number of choices, we're not going to see the market really expand. And here's the thing that's interesting on Model Y is it's priced right in the heart of the market, but it's a form factor that not everybody wants. It's not to say anything negative about it, but some people want it like a true SUV, or some people may want a minivan. Some people may want something that's more of a hatchback. So you have a lot of people that have had to be quite flexible in their form factor desires, their aesthetic desires, their brand desires, because there's really a sort of singular set of good choices with Model Y and its sibling.
They're not getting what they want.
Like, they're not getting what they want, but it's like that's the only choice.
Why has nobody done a great electric minivan yet? Like, that boggles my mind, right? I mean, that seems like it's a no-brainer with packaging and whatnot.
I say, why has nobody done a great every segment?
Yeah,
there's it just hasn't. They haven't come out yet. So I think until you get that, it's going to be really hard.
So what about for R1 then? How does you've sold about 50,000 or so vehicles total over the last couple of years, each year. How does that compare? Where R1 is kind of topped out, how does that compare to your projections for it earlier?
Oh, well, we originally thought we'd do more volume on R1, but we also had thought there'd be more buyers. We thought the size of this segment would grow. We thought would be more people that would graduate from a step up from a $50,000 or $60,000 car into a $70,000 to $90,000 car.
And when you say the segment, you mean the segment gas and EV, or the segment for EVs?
The number
in
of
that
buyers
segment?
that are willing to spend that much money
on a premium SUV or truck.
And I think it's what's the price elasticity? What are people willing to stretch to get into something? And what we now really believe is that for a lot of folks, it's like, even if they like the R1, its price point just puts it out of reach. It's not what somebody's willing to spend. And so that's where R2 comes in. And so for us, that $45,000 starting price point is really important. We think long-term, of course, we have to be meaningfully below that to continue to grow market share. And that's where some of our future variants come in as well. But I think as you get to that place where you're then like in the heart of the market, it changes the dynamics quite a bit. But the product, like being electric and being good, is not enough. It needs to be like electric is that should not be, I bought this because it's electric. It should be, I bought this because it's awesome. It's fun. It fits my family. I love the way it looks. I love the way it drives. Oh, and by the way, it is electric. But when you start with the reason for purchase being electric, it just, I think it's like an excuse or a crutch to allow you to maybe do something that's not incredible.
And so that's a good segue, I think, in talking about what's coming next for you guys. You have the R1S, the big SUV, the R1T, the truck, the van as well, the commercial van. The next step is this R2, around $45,000, a smaller form factor that should appeal to way more people, like you're saying, than these big SUVs. What's the kind of latest, for people who don't know how cars go from like being a sketch to being a car that you can buy, like where are you at in that process?
Yeah, we're deep into it. We're launching the early part of next year is starting deliveries. So we're like testing and developing. And so the way I guess to think about a program like this is it's this is such a unique business. I have a lot of friends that run other types of companies, and you can launch a product if it's like a software business for very little money.
Yeah.
But to launch a program like a vehicle program, it's a multi-billion-dollar effort. Um, and if you try to do it for less, you're not really serious. You don't recognize the task, or you're cutting some corners that you ultimately pay for. But so the reason I call that out is for a big company that has lots of other products, you can absorb that not going well, and the business will be fine. For a Rivian, like it must go well. It's critical for us in terms of scaling, and so the fact that it must go well may sound perhaps scary, but it's actually a really good motivator. It's like a wonderful alignment mechanism because the whole business, all of Rivian, recognizes R2, the product needs to connect with consumers, so we can't sort of can't bend on some of the targets we had in terms of performance, price, packaging, aesthetics, the layout, all that we need to like deliver on, which customers were really excited about when they saw it when we unveiled the product, which was good. But then we also need to make sure that we avoid some of the challenges we had with R1 and ramp up. So the supply chain needs to be ready, production ramp needs to be ready. We need it to quickly get to high volume so that it achieves the cost structure. Because there's the nature of this is, if you're not ramped, you don't have the volume to cover your fixed costs. And you don't have the volume to cover your fixed costs. You see, the numbers just don't work. So you really need the scale to achieve these price points or these cost levels. And so for us, we're at the stage where we've gone through lots of mule development and prototype development. We're now in what we call validation phase. So we do a design validation build or series of builds, which are production designs. So it's like the production release with production suppliers off of almost all production tools. Almost everything you see on the cars is from the production supplier on their production process in their production plant. And then we're building those vehicles on a pilot line that we have. We have like a mini manufacturing plant in California that we built that we didn't have on R1. We built it really to support R2. And that allows us to go through the right process, the right sequence of assembling the vehicles, but on a much smaller scale. And that's to validate the supply base, the vehicle design, the system, like all those things coming together and working.
It's a more mature development process than R1 got even.
Yeah, like R1 was really fun because but we were so like lean and constrained, and we're like so much more mature as a business today.
Yeah. So it's like you don't have the time or the money to say, yeah, let's set up this like,
the idea of doing some
pilot line.
Yeah,
and
like
really
some
figure
of
this out. It's like we got to just go.
Yeah. Whereas on R2, we not only had the time, but we really needed to get it right. And then following that, we have what we call a manufacturing validation build, which is where we do everything I just said in terms of running production design, production suppliers, but we build them in our plant on the line, following every exact production process. And we'll make hundreds of those, but they're not saleable. So, and then along that, think of it as like a continuum. As we continue to build those and make sure all the equipment's running properly, there's a point in time where we go from non-saleable units to the first VIN saleable unit. So VIN 1 on R2 will then emerge, and and then it's like ramp as quickly as possible. And so the coordination, the orchestra of all the suppliers getting ready to then go ramp is a big effort.
We talk a lot about R2 when we write about it. I call it like the CNBC or Bloomberg angle. It's like, this is why it's important to the future of the company, the stock price and everything. If you're a consumer, why be excited about R2? Like let's talk about that as a product. What's awesome about that?
I would say, like, unequivocally, it's the best product that we've developed to date. In terms of it's not going to be the quickest. The quad will still be quicker. The R1 quad will still be quicker. But in terms of all the trade-offs, achieving all those trade-offs within an incredibly aggressive cost target, so the cost on the vehicles the non-bill of material COGS, cost of goods sold, is less than half of R1.
Yeah.
And the bill of material is about half of R1. So it's about 80% the size of an R1, but well under half the cost of R1. So it's like completely different cost structure. And what that allows is a price point. So like the price to value ratio is really strong. And so I think folks that have sat in the car, been in the car, can't believe we're delivering that much car for the price that we're at.
Still holding to 45,000 is the target.
As the base. There's going to be like higher spec versions and performance versions.
Yeah.
But like the lowest price version, which is still really nice, would be 45.
Do you think this will be like a Tesla or Porsche situation where it's like it's 45, wink, wink, but like most of them in the wild, 60, 65, you know?
Well, boy, it'd be great if they're all 60, 65. We're not planning, we're not planning that, but definitely, I mean, what ends up happening, which is not actually interesting, like interesting dynamic. We sell very, very few of the base spec of any of the things we build.
Mm-hmm.
So most folks will see, like, even in R1, it starts like in the mid 70s. Folks come in, they drive it, they're like, yeah, I really like that, but I'm just gonna click a few boxes, and you end up, even if you come in for the base spec, you end up spending a little bit more.
Yeah.
And
I already got 3 motors. What's one more? Right?
Yeah. So and so when you put, we actually end up, because now we're starting to transition to a world where, like when we first launched R1, it was built to order. So a customer would order, they would be fully comfortable waiting for months to get it, or in some cases more than months. It was years in the early days. Now customers come in on like a Saturday and they want to be like driving the car on a Monday. And so we have to predictively build a lot of inventory. And so this is an area I spent a lot of time because it's so interesting. Is we have all this analytics to help us predict what people are going to want. And the reality is like our average selling price of an R1 is around 90, meaning customers end up buying higher spec. And so we think, not to that degree, but a similar phenomenon will exist on our R2, where your average selling price is going to be a bit higher than 45.
Mm-hmm.
There will be some customers that say, I want the absolute bare minimum price, but it won't be a huge percentage. Do
you feel like the lack of tax credits in this equation, how does that factor into your expectations for this car?
When we designed the vehicle and planned for it, we always, it would be wrong. It would have been wrong for us to assume that all those credits and the overall policy tailwinds that existed would persist forever.
Yeah.
And so we designed it thinking about, this is going to be competing against largely ICE vehicles. Like we often think about R2 and we're like, oh, it's going to compete head to head with Model Y. Sure, there's going to be some Model Y crossover and cross shop, but the vast majority of what folks are going to be considering as an alternative, just by virtue of the numbers, are going to be ICE vehicles, all priced at very similar levels. So like the average transaction price of a new car in the United States is around just under $50,000, it's around $49,000. And so,
any particular ICE vehicle targets you're looking at for R2?
No, much like R1, it's because of the nature of that segment, it's a broad net. So it's everything from Jeep Grand Cherokees to Broncos to Toyota RAV4s to Honda CRVs to Subaru Outbacks. It's a really broad net. And you'll have people that are spending $39,000 today on, let's say, a RAV4 that are going to stretch up to 46 or 47. You'll have people that are spending, maybe 55, 60 on, a Grand Cherokee, and they're going to come down to 50. So you're going to have people that move in both directions to converge on where that sweet spot is. And that's why we think the product on its own, the range, the performance, the size, the package have to be so compelling that even in a world without the consumer-facing credit of $7,500, it's just still a great choice. Now, like in the very short term, because there's a step change, post September, end of September, you're going to see a ripple. We'll see that Q4 is going to be, I think of it like as a transition quarter where people's expectations around things like lease price are going to get reset. And along with that, I think you're going to see a lot of these unnatural OEM, vehicle manufacturer incentives are going to disappear.
Yeah.
Where you have, as you described it, like $20,000 being put on the hood of a car of incentive, that those like very irrational behaviors are just going to start to disappear. and you'll see the number of EVs therefore like being force fed into the system drop, and then customers having that want an EV are going to have a less sort of manipulated environment, a more real world environment in terms of what demand looks like.
I'd say in the EV space, there's a lot that's been left unsaid about in the pickup truck arena. Like no one's really cracked that code yet. And, you've alluded like the R2 platform and potential future vehicles on R2 platform. Where do you see Rivian's pickup truck game going? Because we know a lot of people are huge fans of R1T. Like
it's great. That's an interesting question. The R1T, we made a whole series of design decisions around it that contemplated that vehicle appealing much more broadly to consumers of active lifestyle products that are not necessarily truck customers today. And so some of the decisions we took, one could, actually, I'll say this. There's, on a vehicle program, there are truly millions of decisions you have to take. And of course, I don't participate in any, I participate in a very small fraction of those, but as a team, we're taking millions of decisions, and they try to all come together and to converge into something that looks as if one person made all the decisions. So the product feels really consistent and thought through. But there are a few big decisions that essentially act as like these foundational decision elements that once those are made, it like sets up a whole series of other decisions. And so there were a few on R1T. The first was that this is not a work truck. That's a huge decision. That means like what was the ripple off of that decision? It meant we have a air suspension in every car we build. It has electrohydraulic, fully adjustable damping, which is insane and allows for like variable roll control, variable damping frequency. It's great for creating something that's wonderful off-road and wonderful on-road, but it's massive overkill if you're going to use the vehicle to carry sod, or if you're going to use the vehicle as a work truck. So it just doesn't have like the base architecture is not set up to do some of these other tasks at the same low cost.
Really hardcore truck work.
It can do it, but it's just a very expensive solution to get there.
I see, yeah.
So it's not set up to sell a $50,000 version of it. Another big one is we made the bed shorter, and this is going to sound silly. It was very well researched, but we looked at EVs. We said people are going to want to charge them in their garage, and we looked at the average length of a garage, and we knew that the vehicle had to be under a certain length, and so we sized it so that it could fit in 90% of the garages in the United States. And so to overcome that, we said this is a lifestyle vehicle, so the thing that you'd put in there that's going to be longer is something like a dirt bike or maybe mountain bikes. And so in the case of like carrying a dirt bike, the tailgate is not a hinged tailgate, it's on a gooseneck, so it comes out longer. So with the tailgate down, it's a longer bed than most 5-foot bed trucks. With the tailgate up, it's a 4.5-foot bed. But that creates a constraint because it's different than what's out there. And so we made a whole series of those types of decisions, and what we've ended up with is something that is very unique.
Yeah,
it's clearly more of a lifestyle vehicle, for active, adventurous sort of folks that want to put gear stuff in the back. You can use it as a work truck, but that's not its core use case. And then I think as the EV truck space has evolved, you've had others that have gone more work truck, and you've got others that have gone, call it like more big truck, like trying to just like satisfy the desire for scale and size.
Yeah.
And I think this space is so misunderstood because everyone thinks, when you think of a pickup, everyone is like, it's a work truck. And so they go down to like, what are the specs? What's the bed? And I think it's a far more nuanced market. And we see it with cross shop. I mean, the number of people that is surprising, but a high cross shop product with an R1T, more so than R1S, is a sports car.
Fascinating.
Because people are looking at it as
a weekend vehicle.
It's my fun thing.
Yeah.
And I'm going to buy a sports car, or I'm going to get this car that's faster than the sports car, but it also can carry my surfboards and all my gear.
You're not seeing gas GMC Sierra versus R1T.
It's not like very uncommon cross. There's just not an overlap of customer demographic.
Yeah.
And so I think that's like misunderstood. So we see like these comparison tests that put like a diesel truck against an R1T. And I'm like, okay, fine. But that never actually happens. Like those customers, there's not like actual customers that are going out and cross shopping a diesel, let's say GMC, against an R1T. It's sort of fun for like a write up,
Yeah.
but it never happens.
So do you expect Rivian to make more truck models in the future? Like potentially something that's, more of a midsize or a smaller,
Like off of R2?
Yeah.
I mean, we haven't announced anything, but it doesn't, like a relatively, it doesn't take a huge amount of imagination to think of like what comes, like if there's R2, what are the other R2 variants? Yeah.
Mhm.
Yeah. And we sort of hinted at that with R3, where we did an R3X. You could imagine X versions, you could imagine other versions, but as I described it before, the focus of the business is on R2. We think the biggest segment. It's the most broadly appealing, and it's the one that for us will represent the vast majority of our production of R2 products in the short term.
And so, I mean, maybe here's something you can answer, not a specific product question. When you think about the future of Rivian products, like how many of those, like, do you know in your head, okay, these are going to be our next 5 vehicles going out for the next 10 years? Or are you really like R2, R3, and then like, we're still really figuring it out?
Well, you'd asked about our product development process. There's actually a whole series of things that happen way before we get into like deep engineering of the vehicle, which is like conceptualizing what are the products. And so our design team, and we have a design engineering team, and that does a lot of this advanced work. And like was already like thinking about what is R2, what is R3, well before we had moved our full engineering team to work on that. And this gets back to the decisioning point I made before, which is if we took a 3,000 or 4,000 person engineering team and said, go work on R4, everyone would run in circles because no one knows what R4 is yet. So by design, we want a very small number of people that's really thoughtfully defining some of those big decisions, like what's the personality of R4, what's the size, what's the type of vehicle, what does it look like?
And R4 is what exactly?
So my point was just, I was speaking of that more in generalities.
Okay, I figure, but had to try.
But that said, like we are, like the team is working on defining what is R4, what is R5.
Yeah.
Much like you saw with R2 and R3, we contemplate that as a sibling set where you have two very different vehicles that share the same platform, but it would be lower cost than even R2 or R3. But there's no engineering teams on those today. They're, they're very much conceptual.
Are those actual names? Are those? Is it actually going to be R4, R5?
Yeah. We feel like we like the naming convention. It's pretty simple, but yes. There's, I mean, like that workflow of like putting together the future concept. It's a very small part of the organization.
I have to ask very quickly about R3 and R3X, because when you drop that, I think I got texted by everybody I know. Like there was a real unexpected level of excitement around those vehicles. Like what's going on with those two? Like how's timelines looking? I'd just give us an update on those.
A lot of shared content with R2. Part of the logic on how we've developed R2 is to make sure there's as much shared between all the different variants as possible. And what that allows us to do is to then take the entirety of the team and focus on R2, recognizing that by focusing on R2, we actually unlock and enable the future variants as well. And the differences, of course, being things like the top hat, the body that sits on top of the overall platform. But the platform itself has been designed for a broad range of products.
So I wanted to ask about batteries. You guys use kind of the gold standard, the NMC cells that have been around for a long time. You've recently also introduced LFP, this kind of cheaper chemistry that's getting more popular. What do you see as kind of, when you look at the future of batteries and how they get better, what are the kind of chemistries and the technologies that you think are interesting or promising, or that you guys are working on?
Yes, we have a cylindrical cell we're using in most of our vehicles today. and it is a 2170, so 21 millimeters in diameter, 70 millimeters tall.
Mm.
On R2, we're moving to a 46 millimeter diameter cell that's 95 millimeters tall. And on R1, we had a double stack of cells. On R2, it's a single layer. And so that takes a tremendous amount of cost out of just thinking about like the cost of a battery. Everything other than the chemistry is overhead that's there to hold the chemistry and connect it all together.
Mm-hmm.
So it's not adding value. Customers don't care about bus bars. They care about, they care about the energy. And so a lot of the innovation for us on R2 is at the pack level. So it's a structural pack. It's a cell to pack, meaning there really isn't like the sense of like a structural module. It's all integrated into one longitudinally, structurally very capable pack that actually serves as part of the body structure, and the top of the battery pack serves as the floor of the vehicle. In that, of course, there's continued advancements in chemistry, and some of the big trade-offs we make, these are like classic, this gets back to like the decisions where you put 100 people in a room, not everybody's gonna make the same decision. So our job is to try to make the decision that creates the best product for the most people. And so we say like, you can make some of the people happy some of the time, you can't make all the people happy all the time. So where we're increasingly focusing is on the ability for the cell to fast charge, which is an attribute that's generally in conflict with energy capacity and durability of the cell.
Yeah, larger the battery, faster the charging times, and if you increase charging times, then your durability goes down. Did I get that right?
Yeah, and so like you can fast charge, like we can fast charge really quickly.
Yeah,
but you kill like the durability of the cell, and you see it like over the course of, let's say, 1,000 charge cycles, you could lose 20-25% of the original capacity of the cell. So those are the like big trade-offs
for fast charging specifically.
For fast charging specifically,
and as you're saying, you kill the density, right? It's this like balance between fast charging or having really good energy density to get range.
And so we try to find the right balance on those, but we're increasingly focusing on fast charging without losing energy density as we've known it thus far. So not a step backwards in energy density, but in terms of like thinking about new chemistries and how we can use things like silicon in the anode and some of these big evolutions or big refinements that are happening in the chemistry, dialing and targeting those towards fast charge. Now saying that, there's a whole host of new chemistries that are being talked about that are different than what we've known in terms of these high nickel based chemistries. So of course there's LFP, which is wonderful for durability. It's great. That's why we use it in our commercial vans. It's very durable. The energy density is actually quite low, but the cost is very low. And so if you're comfortable having a pack that's physically larger from a volumetric point of view than a high nickel pack, works great in a van, by the way, and you're comfortable with the weight of that, it's more from a gravimetric point of view, it's much heavier. It works really nicely, and you can charge it, you can beat it up and charging it. You can go over and over again really robustly. So that's a chemistry that we've certainly seen. And then I think as you start to think about like new chemistries, like
solid state, things like that.
Solid state to a degree, I think there's a lot of noise in solid state around commercial readiness. That's maybe an exaggeration of reality. It's the especially as you get to like solid metals are very, very hard because of the deposition process you're doing in essentially near vacuum conditions. So it's very hard to scale at cost. You can make cells at very low volume, but to do it at scale is very hard. And then you're seeing polymer-based batteries. You're seeing there's people that are looking at sodium. So there's a whole host of different things being looked at. But the question is, can they get to scale? And so we have a team that looks at future chemistries. And what a lot of our focus has been on is ensuring that we can continue to stay in the front of the curve in terms of energy density and charge speed, but at scale and at very realistic cost.
I have to ask, any one chemistry of any kind, including current, that you find especially promising for your needs?
I think we're going to remain in a world of pretty heavy reliance on nickel, or iron phosphate. But I think that gets into geopolitical topics as well. So essentially 100% of the world's lithium iron phosphate is being done in China in terms of the cathode active material. I mean, truly, it's like
they have an iron grip on that supply chain.
It's nearly 100%, and that is a much lower cost cell. You see that cell being used. It's more than 50% market share in China. It's approaching that in Europe. It's going to quickly exceed that in Europe. The United States, because of our trade relationships with China, has very, very low LFP penetration. I think will likely stay low in the United States unless we see a shift in trade policy.
I wanted to shift topics to talk about the future of the competitive landscape for Rivian a little bit. You made some headlines recently when you said a lot of legacy OEMs kind of want this whole EV thing to go away. We ran a story on that. I got some calls from some of my OEM sources, got a bit of an earful on that. Any reactions to that comment you've seen so far? And do you want to elaborate on that thinking here?
It's good. I'm glad you asked that. I want to be clear. It's not every OEM is there.
Yeah.
But many.
We've seen this attitude.
It's like, I don't use my words, just use their words. Like they're making their own statements on this. And so there are some OEMs that, actually I'd say there's three categories. There's OEMs that are publicly anti-EV, and they've made statements to say they don't believe electrification in the long term is going to represent, it'll represent sub 50% of global demand in the long term, or significantly less than that. That's one category of OEM. Then there's the category of OEM that publicly says we're very pro EV, but is our biggest and most painful adversaries for EV policy. And those are the ones that I find to be particularly frustrating because they say one thing and then lobby behind the scenes for a different thing. And lobby very, very hard.
Yeah.
And you don't ask me for this, but if you call CARB, ask CARB who are their biggest adversaries, you will get an earful. And that's I think that's unfortunate because I sort of wish that the companies were authentic. If I sit here and I say we're pro EV, and then like my next meeting is I'm going to go try to put policy in place that makes it harder to electrify. I just think that's not the kind of thing you want your kids to be doing. And I generally think that's a good metric to look at behaviors. If you don't want your kids to do it, you're probably not doing the right thing. And then there's a third category, which maybe that was some of the calls you had, which are OEMs that are committed to electrification, are doing the work, are investing in the programs, and do want to see it grow. And there are some of those. But that represents a minority of the OEMs in the world.
Is it some of that resistance just wanting your technology to win if you're that company? Like every company wants its technology to win over the others, no? Or is it just a like we know we can't do this profitably without a ton of pain and shifting the whole business?
I think it's circumstantial to the OEMs.
Yeah.
I think this is it's maybe the most it's one of the it's such a unique case study you can imagine being written. So a concept that's long been talked about, written about in business schools and by economists and business people has been this idea of it, the incumbent dilemma. Like folks that have an existing product in the market want to see that product that continue to sell, and as a result are less inclined to work on the product that's going to disrupt that product. And so that is like that human psychology or that corporate psychology is what undermines businesses like Blockbuster to completely lose out to somebody like Netflix and the whole idea of streaming. And that's happened over and over again.
Transition to smartphones, things like that.
Transition to smartphones. I mean, like Sony dominated when it was the Walkman. How come they didn't do the iPod? So like it just keeps happening over and over again that this trend continues. And so I think in the case of automotive, what makes it so unique is that the barriers are so high.
Yeah.
Like enormously high. It takes so many billions of dollars to create a new car company that you haven't had the incumbents really have a lot of challengers. So you don't have this classic disruptive environment where a new company can come in with a new technology or a new product and force the legacy companies to either change or disappear. And Tesla was the first to do that, and you've seen grab considerable market share. I'd say we're the other that's trying to do that at scale. And so if you're a legacy manufacturer, I think a lot of them would, I mean, if they're really honest with themselves, would like the good old days of we can sell 20% gross margin V8 things,
Yeah.
and it continues, that just makes a nice profitable business. I think there's a core challenge that, in addition to the barriers being really high and therefore not having a lot of new competition like what you have in other segments and other businesses, the timelines to develop this technology and to develop these products are very long. And 2 product cycles is essentially the length of tenure for a CEO.
Yeah.
So it's very hard. Like if you're a CEO of a big car company today, the decisions you make today are really what you're going to be experiencing in 2035.
Mm-hmm.
And you probably won't be there
Yeah.
in 2035. And so,
but you've got shareholders to answer to now, and
the shareholders, and
yeah.
in particular, a lot of these legacy companies have shareholders that, unfortunately for them, are much more short-term focused and want to see quarterly results. And so you have a really natural tension between, and this isn't me saying, I mean, this isn't just me saying this. I think the CEOs of these companies would say it as well, is they're being judged on their performance in the quarter, maybe in the year, but the investment decisions and horizons that they need to be planning for span the next decade. And so if you want to optimize for the next year, don't make any EVs if you're a big existing OEM.
Yeah.
Make a lot of V8 powered things and sell them at 25-30% gross margin, and you're really happy. You're printing cash.
Yeah.
But you're absolutely, undoubtedly, like, not up for debate mortgaging the future of the business to pay for the today.
Mm-hmm.
And that's just it's a natural tension. It's a natural challenge. And so I think that you're seeing some of that play out. And so I think the companies that are demonstrating the most leadership are willing to make the investments today, sacrifice short-term gains to protect for the long-term future.
Mm-hmm.
And then I think that a really interesting dynamic here is the need, I think that the necessity of a higher degree of technology vertical integration around software and electronics, which again is a really hard decision to make because it's multi-billion-dollar investments to remove traditional tier 1 suppliers from the electronics and software stack.
Yeah, Jim Farley at Ford has talked about this. It's like they so depend on these outside companies, whereas like Tesla, the Chinese, they do this all in-house. And so it's a sea change for traditional ones. It's
really hard, and it's like a cultural shift, and that's really hard to make. I mean, Jim has been really clear on underlying and identifying this as an issue. It's a real issue, and the legacy manufacturers today that recognize that issue and either make the change either by doing it themselves or partnering, I think, is really key. Because it's, I would say it like this: electrification. We look at electrification as if it's independent from connected vehicles, software-defined vehicles. For a lot of reasons, many of which are coincidental, they're becoming one and the same. So electric vehicles are the platform by which you reset or can reset your network architecture, your software stack.
It dovetails with autonomy.
It all dovetails together. And I think that I'd say it's unimaginable to think about a leading vehicle manufacturer that's commanding significant market share in, let's say, 2035 and beyond, 10 years from now, that doesn't have a software-defined architecture. And what I mean by that is the way most vehicles are defined today, their software and electronics layout is you have hundreds of little tiny computers, which within the industry term is ECUs, electronic control units, that have a little island of software that performs some domain-based function. And so you'll hear this called like a domain-based architecture. And so you have a seat controller, you'll have a door window mechanism controller, you'll have an HVAC controller, each of those being a separate computer.
Isolated, do not speak to each other.
Isolated set of software written maybe by the tier 1. More often, the tier 1 subcontracts out to another third party.
So they don't even know what's in it. And
so like the layers of abstraction. So the OEM says, I need an HVAC. It does these things. They hand it to the tier 1. The tier 1 then develops the system, but they then hand off the software, the coding to another third party. And it's like this little island, and it communicates over a CAN architecture, a CAN network, which is the standard network that's used in most vehicles. But then to do something like an over-the-air update requires all this coordination amongst third parties. And you have like all this unused capacity because you have all these little computers, none of which is fully being utilized. So it's sort of like, I'd say almost the exact opposite of how you would architect a system if you started with a clean sheet, where if you put 20 great computer scientists and electronics engineers together, you wouldn't say, let's build a system of 120 islands of software, all written by different teams, all written to different standards that communicate through a network, a CAN network, but it's very hard to make updates to. And the layers of abstraction between the people running the requirements and the people running the software are at a minimum twofold, often 3 or 4 layers. You would say, let's have the smallest number of computers in the cars we can that make all the decisions. And so you'd end up with what we now call a zonal architecture. So you have, depending on the size of the vehicle, maybe 2 computers in the car, one in the front, one in the back. If it's bigger, like an R1, maybe there's 2 in the back, 1 in the front, that do all the decisioning across one common software platform running on a standard, in-house built OS. And so we built that. And that's what underpins our large, $5.8 billion joint venture with Volkswagen Group to provide them this technology. But I think everyone will need that because I can't conceive of a world where you are trying to compete with either the Chinese Rivian or Tesla on software in this archaic system that is ironically born out of fuel injection systems. Like the first ECU was the moment we went from analog control, we're thinking about vehicles where everything was mechanical, to our first electronically controlled thing was actually fuel injectors. Yeah. And so early fuel injections, they were mechanical fuel injection. Then we went to remember, cars would even label it. They'd say EFI.
Yeah, I remember those.
Electronic fuel injection. They'd see the badge on the side of the car. It was a big deal. And that was the first computer. And then that just proliferated in a really organic, completely unplanned, like a field without seeds, just a system of weeds. That's just all these little computers popping up. Nothing's architected as a system. It's all architected as domains. And we have these domain architectures that have emerged. And the rethink is to say, we don't want this field of weeds. We want very clear, centralized compute, clear OS, designed around modern techniques in terms of networking. And it's just a total shift for manufacturers. I think that's a really big untalked about challenge that is going to hit a lot of folks. Not right now you can have parity for features. The work that has to be done to try to make a domain-based system match a zonal system is enormous. The size of the team, the amount of complexity, the amount of cost to do that is much, much higher. But you're still seeing cars have similar things. We do many more. Us or Tesla do a lot more over-the-air updates than, let's say, traditional. But as in the fullness of time, it's trying to ride a bike with 10 anchors dragging through the mud if you've got a domain-based architecture versus a zonal. And so I think it's just impossible to see how those work in the end.
Yeah, and so one reason you mentioned, and I think it's true, is this threat of the Chinese. China has become by far the biggest EV market itself. They're exporting EVs all over the world, and a lot of these companies are very highly vertically integrated. They're partnering with software companies. They're way far ahead on exactly what you're talking about. This kind of software integration.
But they had the benefit, much like Tesla or like Rivian. If you start with a clean sheet, you would never arrive at saying, I want to have a seat controller. I want to have an HVAC controller. I want to have all these things, built around domains. You would, no one would come up with that architecture. And so not surprisingly, the new tech Chinese companies, Tesla and Rivian, have very similar network designs, which are built around compute consolidation into a very small number of more powerful computers in the vehicle.
And so do you expect, right now, these Chinese cars, for the most, we have a couple here, none from those newer companies. Do you expect to be competing with, do you expect that you and other automakers should be prepared to compete with Chinese cars on American turf, someday in the future?
I think that it's hard to say. I would answer it slightly different. I'd say I think everyone should be planning for that and designing your technology stack around that. But I think it's unlikely to compete in the ways that the question might contemplate, which is Chinese cars built in China with Chinese cost structure competing with U.S. cars with U.S. cost structure without any mechanism to bring equilibrium to the cost structures.
Like on the policy side, the government side.
Yeah, so I think that it's conceivable that Chinese cars could be produced in the United States and sold in the United States.
Right.
Or produced in Mexico.
But it's inconceivable that we would create, imagine the policy framework to say we're going to make sure U.S. manufacturers have to build in the United States, but with a much higher cost structure, but Chinese manufacturers can build in China.
Yeah.
And there's no tariffs. If there's no tariffs, all production would move to China because the cost structures China or other low-cost countries. But because we have tariffs in place, it's going to drive production here. And so the reason I say all that is I think we often look at China as an industry. I think people talk about it around the cost. And I would actually remove that because the cost doesn't, it's particularly in the United States, it's hard to imagine a world in which we handcuff the domestic manufacturers to say you can't leverage Chinese cost,
right?
But enable the Chinese manufacturers to leverage Chinese costs.
Yeah.
So either one of two things will happen. Either we'll put tariffs in place that make the cost equal, or we'll allow Chinese manufacturers to build in the United States. But in both cases, the cost will be essentially equal. There's not there's no magic sauce happening in China that's allowing the cars to be built easier. It's just it's the stacked set of benefits around much lower cost labor, much lower cost of capital. Many of the plants are subsidized by the local governments. So you have a whole series of things that just lead to like an overall lower cost base. What's alarming, if you're looking at the whole industry, is that the technology is much better. And that's the part that if I was an existing manufacturer, I'd get less hung up on the cost and more focused on the cars are actually better.
You guys, I believe, benchmarked a Xiaomi SU7 at one point or had one in
Yeah,
US.
we own one. Yeah,
You own one. Okay,
Yeah.
so any learnings from that? Like, what was your takeaway from that vehicle? I've only
just
sat
to
in
be-
one.
Yeah, just to be clear, like most car companies own most.
Right.
Like if something's being well done somewhere in the world,
Yeah.
every car company finds a way to buy it. So there's like, R1s. There's like we can see where they all end up. Like every car company has a lot of R1s. I think probably every car company probably has a Xiaomi now, at least one or two. And I think it's an impressively well done vehicle. And if you imagine, I always put myself into the shoes of like, say, all right, ignore all the things as in terms of what's going on in the kitchen, and imagine you're just buying the meal.
Yeah.
And so if you're in China and thinking I want to buy a car, what would you buy? And it's like, man, this is a really nice value proposition. It drives nice. It's well executed. The fit and finish is great. And so I think and ignore the brand, ignore like what around everything else. It's just like really well done. And I think there's a number of those that you look at and you say, this is a really nicely done car. Now, do I think it's going to be exported into the United States in the short term? Probably not.
Yeah.
And I think the reason I call out this policy, I'd say it's inconceivable that we would allow Chinese manufacturers to operate without any tariff, but then simultaneously not allow U.S. manufacturers to make stuff in China without a tariff.
It's fairly suicidal, basically.
It's just like that would just be killing domestic manufacturing. And I think that's perhaps this singular topic that both the left and the right politically are very aligned on in the United States.
Sure.
But I don't think that's going to happen. But who knows? In the fullness of time, I do think Chinese manufacturers may start building here. And then they'll win not on cost because the cost will be the same or very nearly the same. And they'll win on tech.
Speaking of tech, also, I wanted to talk briefly about the Volkswagen partnership.
Yeah.
Multi-billion-dollar deal with this conglomerate. How's that going? And I'd say what I'm curious about, what does that look like for the end consumer, both for Rivian customers and for Volkswagen
Yeah,
customers, besides
yeah.
the business part of it?
Yeah, I mean, it's an awesome partnership. I said before I grew up as a car enthusiast. I should have been more specific. I grew up as a Volkswagen Porsche enthusiast. I restored and fixed old air-cooled Porsches, like old 356s, and then by relation have been a massive like VW fan my whole life. My first car. So just on like a personal level, it was really exciting to like have our technology and what we built be part of the Volkswagen Group ecosystem, and to think about how that could, in a positive way, influence some of the products. And it aligns so much with our mission of wanting to get more high quality, highly compelling EVs into the world, so customers have more choice. And by fact of just the size of Volkswagen Group, it's the second largest car manufacturer in the world, and the breadth of their brands and markets that they're in, it makes it, really exciting for our team and really exciting for us as a company. So what we'll start to see, I mean, some of this has been announced. I can't talk about programs that aren't announced yet, but there's a broad spectrum of products that are being done on this technology stack. And in order to compete globally with China, this is, again, the cost structure to have centralized compute in a zonal architecture, and then the feature and content advantages that come with that are extraordinary. And so one of the first vehicles to come out of this is going to be the VW ID.1. And so that, this is now, there's pictures of it available. You can Google this, it talks about it, but it's a $22,000 car being designed for Europe. I wish it was available in the United States. I think it's a really incredible car. Yeah. When people buy that to take it apart, I think they'll be blown away by the elegance of how we've executed one of the most expensive categories of things in the car is electronics and all the associated pieces that go to that, including harness. Takes our technology and applies it in a low-cost structure, a low-cost vehicle, beautifully. So I'm really excited about that. But as I say that, our technology stack's also going to be in a series of flagships that exist under the Porsche and Audi brand. Right. And then, of course, infilling everything in between, including things like Scout and, brands that aren't even sold in the United States. And so the relationship's going really well. The brands themselves have really embraced what we're doing. They want to be leading in terms of product attributes and features. I think our speed and the way that we work very quickly is resonating wonderfully within these companies. And I think the ultimate billboard for this capability and this technology is going to be the products that launch. It's the existence proof that our tech can be applied beyond just Rivian, but into a range of different products at different price points, different form factors, different segments. So we're excited about that.
Very cool.
And we have a couple of minutes left with you, so I want to make sure to get to autonomy stuff. You guys have been doing a lot of work on that front. You recently launched, I think, hands-free driving on highways. You're talking about launching hands-free, in more environments, and then eventually eyes off also in those environments. And you also have this AI and autonomy day coming up later this year. So give us a little preview. What sorts of things are you going to be talking about there? Are we looking at, a distinct roadmap to get to, eyes off, hands off everywhere? What's coming in Autonomy Day?
This is our biggest, both by dollar, I'd say by everything. It's our biggest effort within the business on technology. And much like I look at what we've developed on, let's say, propulsion, or as we just discussed, software and electronics, the building of these platforms takes a lot of time to get the plumbing right. And so if we were sitting here and it was 2020, I was describing to you how we're building a network architecture that's so capable and so flexible, you'd be like, oh, that's sure. And I said, it's going to be so good that eventually the second largest car company in the world is going to adopt it across their whole fleet, and even on, world-class one-of-a-kind brands like Porsche, you'd say, okay, maybe. And so here we are on autonomy, and we've been spending the last several years getting this platform built with, it has so many similarities to what we did in software and electronics, where to do software and electronics well, you take the clock back, it meant removing all the traditional tier one suppliers from our system, so to do software really well, it meant you actually needed to go build a really capable hardware team to design computers. And so it's not like intuitive. It's not like hire a bunch of software engineers. It's go hire a bunch of hardware designers to design computers and a network architecture so that you can actually do great software. And so in autonomy, this has gone through an even more unique and interesting shift, which is autonomous systems up until maybe 2021, 2022. I would characterize those as part of like the AV 1.0 approach, which was, regardless of the application, whether it was a level 2 or a level 4, had actually very similar approaches in terms of how the technology stacked up. And so you had a set of perception on a level 2 vehicle, maybe it's cameras plus radar, and a level 4 vehicle, it's cameras, radar plus LiDAR, that would perceive the world. That perception stack, let's say on a camera, you would identify objects, classify those objects, and then associate vectors to those objects. So velocity and acceleration in X, Y, and Z.
If then.
Yeah, and then all those objects would get handed with their vectors and their classifications to a planner. And the planner was, as you said, it's rules-based. So it was like a bunch of humans programmed the rules of the road. And we would say, like, if these things occur, this is how you behave. And because it was programmed and rules-based, you had a lot of work that would go into tuning it to this specific vehicle and this specific environment, meaning it wouldn't learn, it wouldn't become better on its own. It would, for it to become better, you would have to see how it's performing or its gaps of performance relative to target, and then adjust your code. And so that's where all the systems were developed. And in fact, what was on our Gen 1 vehicles, it had that type of a system. And in our case, it was relying on a Mobileye camera to do a lot of the lifting. Around 2021, 2022, a lot of research started to come together. It became clear that the approach was going to shift dramatically. And in a helpful way, we now have LLMs to show this, but the use of transformers to do a lot of the imaging coding. And then the idea that instead of having this whole rules-based environment where you'd be planning out movements, to instead design an environment that is built on, lots of words people use to describe this, but like an end-to-end approach where you take all this information in, you watch the behavior of the vehicle, and you build a model, a large foundation model or neural net on how the world is driving. And
so you're taking data from real people driving cars,
and that's why it becomes so much,
and using that to teach a computer to do that.
That sound like it's easy to describe that. To do that well at scale, you need a few key ingredients. So the first you need a fleet that ideally is big, and the bigger the better. You can make up for size of fleet, which is important in our case relative to, let's say, Tesla, with quality of sensor. So we have the most, like when we launched Gen 2, I still don't think this is understood. It has 55 megapixels of cameras, which is more than any other car sold in the United States. It has 5 radar, including a really incredible front imaging radar that does X, Y, and Z. And then that feeds a very high compute inference platform in the vehicle that allows us to do some in-vehicle work on that, but ultimately process that data or collect that data based upon unique triggering events. Of course, one of those being like, does the car disengage? But there's a lot more things that we're doing real time. Like even if you're not in self-driving mode, we're looking to see what we would predict versus what you did as the human. When those are the same, like on the highway, not that interesting. When those are different, very interesting. So all that information gets piped back to us. And we're now building this very large foundation model. So like a large, think like multi-billion parameter model that describes how to drive.
Yeah.
And so I call that out because we're at the precipice of starting to see the delivery of now capabilities that map to all this infrastructure that we built. And so the first was hands-free. The obvious next step is hands-free everywhere. Or the obvious next step is that it can work everywhere. And then depending on the circumstance, we take hands-free in almost everything. then the next step is the vehicle can drive itself point to point, address to address.
In your mind, what's the timeline look like on that? I think there's some certain actors out there who say this next year.
It's hard to
next
be
year.
overly precise on it, honestly. So we've tried to be. You can see why you can get the dates wrong on this, but we've said is in 2026 will be hands-free, point to point. We're going to show some of this at our Autonomy Day, and then we'll increasingly start to allow eyes off, which is really valuable because one of the like the unspoken things about self-driving systems, especially in personal vehicles, most systems are level 2, meaning you as the driver are supposed to be attentive to the road and paying attention as a redundant layer, but not actually driving the vehicle. So the way that this is often measured is your hand on the wheel or your eyes on the road.
Which feels designed by lawyers.
So what happens is, as we well know, is you put your hand on the wheel, but you're still texting.
Yeah.
And so this is very, very common. And so it's just a workaround to treat your level 2 as if it's a level 3. True level 3, where it's true hands off, and I actually don't even like using level 2, level 3 because it just confuses everybody. But true hands off, eyes off is where you can be on your phone and not get dinged, like not have the car say, please look up or please, touch the wheel, which are crude mechanisms to say, are you participating and acting as a redundant layer to the driving the vehicle? But rather say you're no longer needed as an active redundant layer. The vehicle is fully able to drive itself. We're going to call you up if we need something, but we'll give you enough warning to put your phone down, put your book down, put your iPad away, and reclaim, active participation in the driving of the vehicle. So we think that is, that's going to be pieces of that in certain environments we'll be playing out in 2026. It'll be like second half 2026, but 2026. Now, the reason we set up this Autonomy Day is we've done so much work in this space that we wanted to show all the things that are there. We wanted to time it around the time when you start to see these things manifest into real features. There's one thing to talk about in the abstract and say this will come. But we want to start to deliver a few of these breadcrumbs along this journey. But I called out this AV 1.0 versus 2.0 as an important distinction because so much investment happened prior to 2021, 2022 that is largely throwaway. So if you built a really multi-billion-dollar platform around a rules-based approach, it just doesn't matter.
Yeah,
it's like
no learnings from that. Nothing terribly useful for what's next.
Yeah, it's like if you spent billions of dollars developing an anti-skip CD-ROM player. Like who cares? It's like an irrelevant technology, and so it just doesn't matter. And so you have this advantage of not, in our case, being like a second mover in this to really go fast and to design it entirely around this feature stack. And so that's what we're focused on. I couldn't be more bullish on it. I do think that as we get to the end of this decade, as we get to 2030, 2031, the ability to have hands off, eyes off in most situations is going to become very valuable and will start to drive a lot of purchase decisions. I think it could help accelerate, by coincidence, electrification, because I think this is most likely to be seen on electric vehicles. I think this is a driver to even Tesla's demand today. And so we're full throttle into focusing on this as a business.
RJ, we're almost at time. I don't want to make you miss your flight out of Kennedy Airport, but just want to say this has been an amazing discussion. Anything that you want to add that we didn't cover? Anything that you want to add about what's next for Rivian that maybe hasn't been reported yet?
We talked about autonomy and AI. That's important. No, I think you asked me a question about 2009, which was, it's interesting in reflecting on how different 2009 is than 2025. And I do think that I have 3 kids, sort of like raising kids. Sometimes the days may seem like they're time is going slowly, but then you zoom out and you're like, wow, it's going really fast. And so I think the amount of change we're going to see in the next 10 years is going to be far greater than what we saw in the last 10 years. And so as much as it seems like there's some roadblocks and speed bumps today, I think if we were sitting here and it was 2035, we will look at it and be like, wow, can you believe that in 2025, we were worried about the $7,500 credit slowing down electrification? And I think we're going to be in a world that looks so different than today. And I think a big shift is going to be how market share changes. I think you're going to have very different dominant players in the auto industry that are different companies, different business models, and that's like going to play out in the next decade. So it's sort of hard to believe, but in much the same way that the idea of an electric truck in 2009 seemed like an impossible dream, not for Rivian, just as a concept.
Mm-hmm.
And now it, of course, exists in the world. I think the idea of very high EV penetration, where you've got most folks have gone through that one-way door and can't imagine not, quote unquote, refueling their car at home at night, or can't imagine going back to the fueling station. That's just it's going to be the world we live in 10 years. And so I think the work that you guys do to help tell that story is important. I think it's important to remember that, because we can easily get down on some of the short-term challenges, but I do think in the the fullness of time, the end state's really clear.
RJ Scaringe, thank you so much for joining us.
Yeah, thanks.
Thanks for listening to the Plugged In podcast from Inside EVs. We'll be back next Friday, as always, with a fresh take on the week's EV news. Today's show was edited by Mike Perkins and brought to you by the Motorsport Network. If you liked what you heard, give the show a follow, subscribe to the Inside EVs YouTube channel, and check out all our EV coverage at InsideEVs.com. See you next time.